Today, I'm going to explain to you exactly what we've seen in the real estate market over the last 3 years, as well as what a future scenario could look like where it might actually make more financial sense to buy a home now, even with higher interest rates, even with a higher home values, than waiting for interest rates to drop. All right, let's get into it. Okay, so the first thing we want to take a look at is what have interest rates really done over the last, this is a 5-year chart. This is right off of the Freddie Mac website, so you can check that out. I'll leave the link in the description. So if we were to start off by taking a look at April, right? And April is significant just because it's right after the pandemic hit, and it's really when we start to see the beginning of interest rates declining in 2020. But looking even before, so let's look 2019 to 2020, we saw an average, I would say that we saw interest rates around the mid threes. So 3.5, still a very good rate. But then, of course, as we all know, the pandemic of 2020 hit. March, things got a little wonky. But then come April, we started to see interest rates start to go down. And now from April of 2020 to April of 2021, we saw interest rates down in, the low threes, high twos, right? Even the mid twos, we hit as low as 2.65, I think was the lowest. There you go. So as of January 7th, 2021, we see a 30-year fixed. You're looking at about a 2.65% interest rate. So if we look at that and then we say, okay, so if interest rates came down, what did that do for home values, right? So we'll go right over here. Now we're looking at the New Jersey MLS, which is one of the multiple listing services we use here in Northern New Jersey. It's primarily Bergen County, but does overlap into a couple other counties as well. So this is an example. Again, now this is from April 1st, 2019 to April 1st, 2020. So we would say that's a pretty normalized balanced market, still a seller's market, but before it became an extreme seller's market, we saw the average sold price here in all of the New Jersey MLS of 500, and we'll round up to 533,000. Okay, so that's the number we have going in. Now, the pandemic hits, interest rates go down to the mid twos. So dropping almost a full percentage point from their average, in the previous year. And we see that home values actually rose. This is no surprise to a lot of people, but they went up about 14%. So the average sale price went from 533,000 to 600, and we'll round up to 609,000. So that's a 14% increase by interest rates just going down 1%. Now we know here there was a lot of other things that also went into that. But there's a lot of demand right now too. So don't completely discredit that increase, right? Then we also saw, let's go back to the calculator. So over the course from, let's pick it up back at April 2021, we see rates are, kind of dipping a little bit back up. They're in the 3%, but through the next year, they're going to continue to vary between that 3% and mid twos. And what that does then for home values again. So now going from April 1st, 2021 to April 1st, 2022, home values continue to increase, right? So now we see the average sale price goes from 609 up to 680. And that's another 11% increase with interest rates being as low as they are and high demand. So not enough inventory in the market. Now let's continue to track these interest rates, because now we know right around, we start to see December of 2021, January of 2022, interest rates are starting to tick up. But we really don't start to see it go beyond what people are used to and start hitting the fours until about middle of March, but really April is really where people are starting to settle into these high 4%. And then over the course of the next year, up until, through August 2022, we're seeing interest rates rapidly increase, right, to up to as high as 7% at a certain point here. So we were getting quotes at 7%, sometimes even a little bit higher. So we have to think, okay, right, the whole idea behind raising interest rates was to slow inflation and to put a little bit of a cap on spending and lessen affordability, so some of the spending wouldn't cause so much increase in values of literally everything, but home values, of course, as well. So if we look at 2022 to 2023, again, we would think that with raising interest rates, right? Remember, we just went from the low threes to high twos up to 7% in what feels like, let's see, December of 2021, we're at 3%. And then before you know it, December of 2022, we're in mid sixes. So over the course of a year, they rose that much. You'd have to think that home values were affected. But as we look at where it stands at the end of 2023, home values continue to rise. Now, they didn't rise their 14 or 11% or as much as they did previously, but they're up about 5%, 5.8%. So definitely normalized a little bit. But this is with interest rates at a radical increase over a short period of time, and they still managed to increase in our area by 5%, almost 6%, which is, impressive. So, all right. So now we look at, what does that home cost me today, right? So we look at our mortgage calculator here and we say, okay, well, if I were to buy a home today for $500,000, and taxes, insurance, all that stuff will stay the same. I'm going to read it through once, but that will stay the same. So we're estimating property taxes at about $12,000, which is about what we see in this area, and homeowners insurance at about $1,300 per year. Everything else now, so let's just say that we're buying a home at $500,000. We're putting 20% down, which you don't have to do, and your interest rate is at 6.5 right now. You're buying today, let's just say they're at 6.5. That would put your monthly payment at about $3,636 per month. Okay. So that's higher than some of the clients we're talking to would like to see, right? That can feel like a lot. And that's a good payment. Don't get me wrong. So let's fast forward and say, okay, well, you know what? I'd rather wait, right? And I'm going to buy that $500,000 house with a 5% interest rate. Well, the problem is, when we saw interest rates drop and stay low, we saw home values increase 14% and 11% in single years. Now, I'm not necessarily saying that they will increase 14% or 11%, but it's not off the table, right? For as drastic of a drop increase as we saw in interest rates, a drastic drop in interest rates or a gradual decline in interest rates, I believe it does increase buyers' buying power, right? The amount that they can afford, which then puts more people bidding on the same home, which does drive up values. So the idea that, lowering interest rates couldn't increase it another 14% or double-digit percentage, it's not completely off the table. It feels extreme, and I get that. But if we really think about what we've just seen, it's hard to take anything off of the table as a possibility. So let's say that home now actually does increase 14%. And now that home is worth, that same exact home was worth $500,000, is now valued at $570,000. That's what it's going to take to buy that same house. So now you waited, let's say 2 years for interest rates to come down to 5% because that's what you wanted to wait for, because you felt the lower interest rate was going to make a difference. And it does. But now that same home at $570,000 with 20% down, which is now an extra $14,000, puts your monthly payment at $3,556. So now we waited 2 years. We were maybe renting. Hopefully, maybe we live at home. We were able to save some money. But putting money into something else that wasn't our own property, or what we at least saw for the long term. And now that you've saved, get ready for this, guys. You've saved yourself a whopping $80 per month to wait for interest rates to go down to 5%. To me, that just doesn't make sense. Now, understanding that, yes, we're talking about a home increasing 14% over 2 years doesn't seem off the table as things are projected and moving right now. It really doesn't. So let's go back to our original scenario. And let's say we bought that home today for $500,000 at a higher interest rate, 6.5%. And again, just to remind anybody who's not watching and is only listening, that puts your home monthly payment at $3,636. Now, you hold on to the home. That mortgage payment's a little uncomfortable, but you can manage it for a year or two while you wait for interest rates to come down. Now, that same home that was worth $500,000, you refinance that home, and now your monthly payment is $3,255 if you're refinancing into a 5% interest rate, which means now you've effectively saved $381 per month, which is amazing because you have now just been running your life and budget on $3,636, and you're now saving $380 a month. That's one scenario. The second scenario is, let's say over those 2 years, the home does increase 14%. Interest rates are now down to 5%. You have a nice chunk of equity in your home. Maybe you need a new kitchen. Maybe you want to put a pool in the yard. Maybe you want to buy another investment property. You can take out a loan, a line of credit against the equity in your home. You could do a cash out refinance, so lowering your payment. Maybe you keep your payment the same, but you pull $50,000, $60,000, $70,000 out. I mean, you just have so many more options because you weathered the storm in the short term, which I think could, for some people, could be the absolute right scenario. So there you go. That's why you might want to consider actually having a conversation and learning more about, is now the right time to buy or sell a home? There's a lot of noise out there in the media right now, people telling you who really don't know that now is not a good time to buy. Listen, they may be right, but they may be wrong. And not having that conversation could cost you money in the long run and a better life in the future. We're here to help you with that. My name is Pete Kopech, and if you're interested in learning more about that, you can reach out to us anytime. We'd love to be your real estate team of choice. And of course, if you found this video helpful in any way, hit that like button, because by liking and subscribing, it helps us reach more people and get more of this helpful information in front of them. Thank you guys so much. And until next time, later.